Welcome to Government Contracting Weekly, sponsored by AOC Key Solutions Incorporated. Government Contracting Weekly is the only television program devoted exclusively to the competitive and dynamic world of government contracting. A world where coming in second place is not an option, but where principle-centered winning is the only approach.
Good morning and welcome to Government Contracting Weekly. I'm Jim McCarthy, the owner and technical director of Key Solutions and the host of Government Contracting Weekly. There are a few areas in any business arena that are more dynamic and consequential than mergers and acquisitions, or put more commonly, M&A. That's why in today's show we have assembled our own complete M&A deal team made up of a corporate executive, an investment banker, and a financial advisor. And who knows, maybe by the time today's show is over, our guests will have created a brand new merger or acquisition deal right here on our set and make television history. On our panel today is Bryan Ware, the Chief Technology Officer of Haystax. Good morning, Bryan.
Good morning.
Good morning, sir. We're also joined by Jason Kaufman, a Managing Director at the Chertoff Group.
Good morning.
Good morning. And last but not least, I'm happy to also welcome Joe Burke, a partner in Transaction Advisory Services with BDO.
Good morning.
Glad to have you, Joe. Thank you very much. Now, as always, there's a lot to cover, so let's get right to it. Bryan, let's start with you. You were a co-founder of Digital Sandbox. Tell our audience about how that came about and how you came to know Joe and Jason. Could you do that?
Sure. A partner and I started Digital Sandbox in 1998, actually. We'd had the idea from some previous work that we'd done about trying to build a company and build a product that could use analytics to predict future events, and in this case it was terrorism events, so kind of well before 9/11, and that area was what it is today. We built that into a very successful risk management, risk analytics business, and after almost 15 years, 14 years, we decided that it was time to exit. Us, our shareholders, our investors, our board. I had known the Chertoff Group, the principals of the Chertoff Group, from serving DHS. So I got to know Jason through some of the people that came over from DHS. BDO, actually, R.G. Wiltsey Robinson had been my accounting firm for a long, long time. So they introduced me, and actually Jason introduced me to Joe. They'd worked together on some deals before. So it was kind of naturally the team that we went to help us to get prepared for and to get through that transaction.
Very high-powered team, it looks like to me. I don't know. Well, anyway, Bryan, how about telling us about the successful transaction that had just taken place? Could you give us a little bit more details on that?
Yeah, so Digital Sandbox had been around for a pretty long time. We originally kind of bootstrapped the company. We raised some money from friends and family. We later did a small venture investment. After that, we actually did some convertible debt. We had our limited partners from our venture investors participate with us, along with some new investors. And so, we really had, by the time it came to a transaction, we had a pretty complex capital structure. But we were frustrated with our growth. We felt like we were growing well, we were profitable, but we weren't as successful. We weren't as able to impact as many customers as we really wanted to. We were also fairly small and in an interesting niche. So we had some federal government business, but the majority of our business was in states and cities, and the majority of our business was fixed price and commercial. Right. So it was kind of a little difficult to understand our pipeline, because our pipeline was different than a lot of federal customers. It was difficult sometimes to understand the kind of business we had, because we had a lot of very productized technology and licensing revenue. So it was really important for us to be able to use the experience of the Chertoff Group, and their understanding of this market, not just to present us and to position us well, but to find the kind of company that was really going to value us, the right partner right. to acquire us.
So one more question of you before we go to our other gentlemen. So in this transaction that you just described, any lessons learned come from that? Anything that you learned after the fact that you kind of wish you knew beforehand?
Oh, I think there were a lot of lessons learned. A lot of them just come to the way that the way that you have to present yourself, the way that you have to present where you're going in the future, but also what you are today. But I think probably the The most interesting thing for me is that, you know, we'd seen auction processes before. They're very successful. You know, the bankers will all tell you about using the auction to get the highest, you know, the highest value to the shareholders. But I think the thing that impressed me the most was that I don't think that the company that acquired us even knew that we existed, or would have really sought after us, and we didn't know that they existed either. And so I think one of the things that really struck me through our process is how important it is to get the introduction in the first place, and that relationship working between, you know, the right acquirer and target.
So there may be some lessons there for our audience as well who are involved in M&A. Okay, thank you very much. We'll come back to you, of course, obviously, but Jason Kaufman, how about telling us a little bit about your background and your role in M&A?
Sure. So I've been an investment banker in the government contracting market for about 15 years now. And really over that long period of time have closed about 50 transactions, over $3 billion worth of deal value. And as a financial advisor, what we do is support sellers and buyers in going through the process of a transaction. So in the case of Bryan's company, we help Digital Sandbox to go through the entire process to maximize their value in the process, but also to find the right cultural and strategic fit for the company as well. We also support buyers who are going through a private equity process, who are looking to identify new opportunities, new investment opportunities and platforms in the sector to assess risk and assess the opportunity in a transaction.
Okay, well thank you very much. Joe, your background and your role in M&A.
Sure, I'm a CPA, so I provide the accounting, diligence, accounting discipline when talking about the risks and what's going to happen with the going on to the new buyer. I've been a professional for 20 years. The last 8 years been strictly for due diligence, and as helping Bryan and companies like Bryan's is really through that sell-side diligence of helping to communicate with the buyer. And while Bryan is talking about strategy and where they are, where they become, it always comes back to the numbers and helping to articulate the numbers. And as for Bryan's example, the way they grew, they had a very lean finance department, which is very common for a lot of high growth companies. And so when you go through a sales process, is having a financial advisor to help with that due diligence request, keeping the quality high, helping support the numbers with the story, it just helps provide that transparency and clarity. And I think one thing that I think Bryan and Jason will agree is things sometimes take longer than you hope, longer than you expect.
No, really?
Exactly. And so through that is being able to help provide that clarity, that transparency, so that you can get it right the first time and just help with that process.
Okay, well thank you guys. Jason, first question for you here is, give us sort of the macro view of the M&A market as you see it. What's happening within the market? Give us a quick snapshot.
Sure. Well, I think actually Bryan's transaction is very emblematic of what we're seeing in the market. 2013 was muted from a transaction activity perspective. Things were slowed down by sequestration, by the fiscal, coming off the fiscal cliff in 2012, and in 2013, all of the sort of sequestration and shutdown that we experienced in October. That said, that there are still segments of the market that continue to experience very robust M&A activity. 2013 was really the year of the smaller transaction. Most of the deals that we saw were sub $25 million in deal value, and that's really because acquirers are looking to make very specific targeted acquisitions that give them new capabilities, particularly in the areas of cybersecurity, mobility, cloud, and data analytics, and some healthcare IT as well. So what we're seeing is a combination of strategic acquirers. We call them strategic because they're larger operating companies that are coming in to fill a capability gap. But we're also seeing a lot of private equity funds like Edgewater funds that backed Bryan through Haystax, who are really looking to build a business in the high growth segments of the marketplace.
Well, thank you. Bryan, you were talking a little bit about, Jason, about some targets and stuff. If I understand correctly, you sort of occupy a unique position in that you are both a seller and a buyer, okay? So what I would like from your perspective, or what our audience would like, would talk about the quality of the targets and the impact that the quality has on valuations in the M&A arena.
Yeah, so just a few months back, I was a seller. In my new role as the CTO at Haystax, I'm really supposed to be helping to support the the growth of Haystax through acquisitions as well as organic growth. When we look at companies to acquire, I think the challenge that we have is the same companies that we want are the companies that Jason just mentioned are in the sweet spot of the market right now.
Right.
And so, it is challenging because those companies are going to command higher valuations. And so I think that, we're not really interested in that kind of the race to the bottom. I was just hearing the last show. There's a lot of lower end services that are still part of the government marketplace. We really want to be building a very high end, very sophisticated data analytics business, and the companies that we're looking for are the same ones that those big guys are.
Okay. It seems like it's a very complex environment that you all work in, and part of it, of course, are risk areas and getting the sellers prepared and all that. So why don't you talk to us a little bit about that, Joe?
Oh, sure. And it's, just as Bryan said, is when there's very few quality companies right now that are getting a lot of attraction, and then there's a lot of companies who are still going through their growth challenges. Mm-hmm. And they're still going after those LPTA contracts, lowest price technically acceptable contracts, or they have cost plus contracts, which are it's very difficult to grow from there for a buyer and see a higher profitability in the future. And what is going on for the sellers is they need to really explain to the buyer universe of what is that path forward. Mm-hmm. And looking at that path forward is having what is their pipeline, where are the contracts they currently are serving, what's going to change those contracts, and what are those new opportunities they're going for.
Right.
And that's going to help the buyer understand, does this fit with their strategy? How does that fit with their company?
Okay. All right, well, let me ask one question, maybe of all you gentlemen, or maybe any of you or whatever, but let's talk about the future of M&A for like 2014. Okay. Now, it's been widely rumored that a lot of companies have been stockpiling cash, maybe during this time of uncertainty or whatever.
Right.
Can we expect another round of consolidations and mergers and acquisitions? Is that going to happen?
I think so.
Yeah.
We expect it at the Chertoff Group, and really it's driven by a couple of different things. One, if you look back over the last 18 months, there's been tremendous turnover at the very senior executive ranks of a lot of the large primes. Mm-hmm. Those new executives have now come in, and they've really gotten their sea legs under them, and they're starting to do more transaction activity. If you look at a company like CACI, where basically the entire senior executive team turned over, mm-hmm. And a new team came in from Lockheed Martin, led by Ken Asbury. Mm-hmm. They just closed an $820 million acquisition of 6-3 Systems last month. Mm-hmm. And for us, we see that as sort of a predictor and a bellwether of more transaction activity to come.
Okay, Joe.
Well, and also just to comment on that is private equity has a lot of cash.
Yeah.
Yes.
That's right.
And they have a lot of capital that they want to deploy in the market. And I think the challenge right now, and I think the challenge will continue in 2014, is finding that right platform company. Yeah. Where is that business that they can invest in,
right.
and then grow from it, and either to provide their business expertise, their contacts, or also to do other further bolt-ons to increase the scale.
Thank you, Bryan. A final word on this subject.
We're really excited about our timing at Haystax. I mean, we're trying to build a mid-sized, mid-tier company, and we know that right now the large guys, you said, are having to kind of evaluate what's going on with all the disruption in the market. A lot of the small companies have been impacted by a lot of these disruptions as well, and so we've got capital to deploy, and we are going to be very aggressive in 2014 in both organic growth, but also in acquiring new companies to add to our platform.
Great, thank you. Jason, question for you. As you monitor the government contracts market, what's the best time for a company to be acquired?
Sure. Well, the answer, I think, from our perspective at the Chertoff Group is you really need to go through a very detailed stakeholder analysis to answer that question. And so we encourage all of our clients at the very beginning of our discussions to look at who are you dependent on? Your customers, mm-hmm. your employees, your shareholders, your investors, and really understand how a potential sale would impact everybody involved. Obviously, price is the first, second, and third concern that most sellers have, but we also find that a better decision-making process is informed by strategic and cultural fit as well. And so really from a seller's perspective, one of my mentors once told me the best time to sell is when things never look so good. And we've obviously come off a very long period of time in the M&A market where that was the case. And we're really at a point in time now where things are more nuanced than that. And so we really encourage sellers to really look at what's the most important to them. Is it selling and exiting the business completely? Are you looking to raise capital in order to go and do what Bryan did and really take your company to the next level of growth, to fund acquisitions and fund investing in new product development and new markets? Or are you really looking to sell out to that very large strategic buyer who can give you sort of greater market penetration for your products? Right. So really it's about finding the right time tactically when there's good momentum in your business, when you're growing, when you're not having to go through a large recompete or sort of protest environment, but at the same time really overlaying that with your own personal objectives as an investor or as an entrepreneur about what you're looking to accomplish out of a transaction.
Joe, how's that sound to you?
Well, I think in practicality, it usually, at least I see, or entrepreneurs, clients call me, it's we just won this big contract award. And it has a 5-year life. It's really going to double the company, or it's a really significant event. It's a big milestone. And that's when they say, should I sell? And it's really after that big win. And this is where I kind of suspect, and from talking with them further, is they're a little fatigued with the business. And it's through this win is now here's their opportunity to then sell at the highest level. Do you see that as well, Jason?
Yeah, we do. I mean, contract vehicles especially are very attractive to buyers who are looking to get access to a particular customer, to a particular agency, and they do see that win at their back. But also from a buyer's perspective, as Bryan knows, when you're really looking at a seller and that potential potential entrepreneur or executive wanting to exit the business, that's very disquieting to a buyer.
Yeah. Well, it's just to point a little further is usually the universe that they're thinking is going to buy them is those who lost that contract vehicle. Right. So it's hey, we won, and we know who the competition was. Is who was looking for that contract and did not get it? Are they the more likely buyer?
Or are they prospects, in other words?
Exactly.
Okay, let's talk vector a little bit differently. Let's talk about corporate growth strategy for a second, and suggest that maybe, I mean, I'm sure there's other strategies, but two of them we want to talk about. One would be a strategy of acquisition, and another would be a strategy of organic growth internally. So a question for you, Bryan, what would be the merits and the challenges associated with either merger and acquisition or with organic growth? How do you see that shaking out?
Well, we want to do both, and it's challenging to do both, actually. So, part of what we believe is some of the special sauce of our business is acquiring companies and then how and when to integrate those companies so that they're not separate companies where the whole is just the sum or even less than the sum of the parts, but where you target companies, you bring those companies in, and you integrate them together so that there is value created from the synergy of those companies. So that strategy really does emphasize acquisition in ways that are very complementary, that give us leap ahead or accelerating capability over where we would go anyway, and then taking those companies and integrating them so that we fuel organic growth and organic value creation. I think that what I'm learning as I'm kind of on that side now is that if you wait too long, it's very hard to integrate the companies, and if you do it too quickly, you lose the culture and a lot of the employee loyalty and morale. If you issue new business cards the day after the acquisition, a lot of what you've just purchased. So I think it's hard to strike that balance, but that's something that we're doing right now as we integrate the companies we've acquired.
Jason Kaufman, let's stick with that same topic, but let's say you're advising a small business or a mid-sized business. Would you be advising them to lean towards acquisition strategy or organic strategy in this market?
Right. Well, I think there are some really interesting opportunities for acquisitions in this market because valuations are down for a lot of the segment of the marketplace, and there are opportunities to make sort of value investing in a way that there wasn't necessarily a couple of years ago. But that said, organic growth, there's no substitute for organic growth. So if you can find ways to grow that in that direction, you definitely want to put dollars and resources behind it. From our perspective, though, everything that you need to be delivering to the client today needs to be about both delivering new capabilities to the customer, but also helping that customer to save money. The previous cycle that we've gone through was really about delivering new technology capabilities, the new next great widget that they can help for an intelligence mission or for a homeland security mission. But today it's really about how can I deliver new capabilities, but also help them to save IT costs through consolidation, through cloud, et cetera.
Okay. What points do you look at from an acquisition standpoint when you are the buyer? What are the criteria that you might have in the back of your mind?
We're looking for really strong, deep technology. We want differentiation in that technology. We want moats around the business. We want to have a competitive advantage when we merge you into Haystax. Obviously, we're looking for things that are in the, along our business plan as well. And I think after that kind of technology, then the next thing is really the culture and the commitment of the people. The technology is, source code, whatever. Those things matter a lot, but you need the know-how and the insight and the vision of the people that created it in the first place. So we want those people to stay with us and to be part of building something bigger. And I think the last thing, and this is probably something that Jason and Joe can talk about a bit as well, is we need the seller to have some realistic expectations of what their business value is. And I think one of the things that we're seeing a bit of right now are companies that are really engineering services companies, really good engineering services companies that are trying to brand themselves as product companies. Probably to get a higher multiple, probably because that's part of the vision, but they haven't really been able to execute on it just yet. And that kind of separation in perceived value can sometimes be a challenge to getting a transaction done, or getting a successful transaction done.
Jason or Joe, you have any thoughts on that?
Well, I think it's really about having an honest conversation with the seller up front about what their objectives are, and really understanding what the current market will hold for their particular company. Every buyer sort of has a different perception of value, and a very valuable company to one potential buyer may not be to another. So really it's about sort of understanding the risks and opportunities in the business and how it matches up with that specific buyer. I think I just want to encourage buyers right now to not think so myopically about the next 6 months or the next 12 months. Acquisitions are really about a 5-year, long-term value creation opportunity, and we're seeing many buyers be very focused on sequestration, shutdown, and not thinking about the next 3 to 5 years out.
Sure, and as far as from our support or help is treating due diligence as a fact-finding mission and really proving what are these contracts for, what is the true fixed cost, variable cost of the business, and really helping support that strategy and really to shed light on what are the underlying financials supporting the model, supporting the numbers, and quite frankly to confirm or disconfirm what you're looking for. And when Bryan's looking at a company and these are the value aspects that they're looking for, do the financials, does the history hold that?
Yeah.
Okay, well, we've covered a lot of ground today in our show, so what I'd like to do is leave each of you with an opportunity to give our audience one takeaway, one thing that you really, really want them to remember. So what I would ask, and we'll start with you, Joe, what would be your one takeaway? It could either be from a buyer's perspective, a seller's perspective, or both.
Great.
Okay? So
I'll just do quick for each. Is for seller is be prepared. Is to be ready to anticipate what is the buyer's due diligence needs and have it ready before it's needed. And from a buyer's perspective, speed matters. They need to show that the seller here's the path they needed to accomplish during diligence to end in a deal. Knowing who's doing what, when, and why provides much support from a buyer.
Okay, thank you. Jason, your takeaway.
Sure, I think from my perspective for 2014, deals are still going to happen. Good deals are still happening. Companies with strong capabilities in specific differentiated technology areas continue to garner good valuations. 2014 will still continue to have some uncertainty, and from our perspective at the Chertoff Group, we see really our advice and our counsel being what's so critical to helping companies to navigate those uncertain times.
Okay, great. Bryan, your takeaway? Buyer, seller, or both?
Yeah, well, it's kind of a both. I mean, I think as a small company, as a seller, it's always be creating value. Focus on that value. I think the process of selling a company is a huge distraction on running a business, and I think that it takes companies sometimes away from what made them great. Focus on that value, because as a buyer, that value is what we're looking for. That, by the way, is why we need guys like this, so that they can take the burden off of the entrepreneurs that are creating that value to make sure that the deal happens, as Joe said, get it done as quickly as possible.
So speed is really important.
It's always, time kills deals.
Yeah, time kills deals.
True.
Yeah, very good. Okay, well, thank you. That brings us to the close of our show, and I hope those of you in our audience feel more knowledgeable and somewhat up to speed on the status of M&A in our government contracting industry. I'd like to thank our panel. First of all, Joe Burke, we want to thank you for your appearance here today. And
thank you, Jim.
Thank you very much. Joe is a partner in the at BDO, excuse me, I beg your pardon. And then also I'd like to thank Jason Kaufman, Managing Director at the Chertoff Group. Thank you. And then finally, not least, but Bryan Ware, the Chief Technology Officer at Haystax. Thank you, Bryan, for being here today.
Thank you.
Good morning, my name is Alan Horlick and I'm the executive producer of Government Contracting Weekly, which is currently in its second year on television. Now, as we move into a new year, I want to share with you some exciting news, and that is our decision to begin producing and airing commercial messages. This unique program attracts a pure concentration of both industry and government decision makers. As an advertiser, you can't afford to waste your money. So whether you are a contractor or a service provider, Government Contracting Weekly offers you the perfect environment and the perfect audience so you can make your own best pitch on why you should be hired. If you'd like to learn more about advertising in Government Contracting Weekly, you can contact us at governmentcontractingweekly.com and click on Advertise.
At Key Solutions, we have been working for more than 30 years to help government contractors win and retain government contracts in excess of $125 billion. We understand that coming in second place, it's not an option, and that principle-centered winning is the only way forward. That's how we have worked with 9 out of the top 10 and 87 out of the top 100 government contractors. I'm Jim McCarthy, owner of Key Solutions, and we want to help you win or retain your next contract. Contact us at aockeysolutions.com. I'd like to thank you, our audience, for once again making Government Contracting Weekly a regular part of your learning regimen. On behalf of all my colleagues at Key Solutions, I'm Jim McCarthy, and we'll see you next week.
You've been watching Government Contracting Weekly, sponsored each week by AOC Key Solutions Incorporated. Government Contracting Weekly is the only television program devoted exclusively to the competitive and dynamic world of government contracting. For additional information, comments, questions, or suggestions, please write us at governmentcontractingweekly.com.